Here we have the current stock market update for NIO Incorporated, stock ticker NIO. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So here we have the 30-minute price chart for NIO. Each candle on this price chart will represent a 30-minute trading period. And in this video, we will outline some important support and resistance levels, some price zones, which can hopefully be used to generate profitable trading strategies for this stock going forward. So as we can see here, we're starting to move into the end of the trading week here, and share prices are once again attempting to move into this area at roughly 565. We have seen some prior failures right around this level. And if we did see a third failure here, that would be a bit of an ominous signal because ultimately what would be created here would be a triple top resistance zone. That is a bit difficult to break on many occasions. And as we can see here, this prior drop from this area was fairly substantial, at least on the shorter term timeframes. If we pull out a bit, it doesn't seem as extreme, given that we have seen some fairly massive moves here to the top side in a very short period of time. So, of course, there does need to be some pullback here at some point. Indicator readings need to be worked off when they're overbought. And it does often require a new pullback for new investors to sort of get long the stock and re-enter the market. So, as things currently stand here, the real question that we were trying to ask last time was going to be whether or not this 23.6% Fibonacci retracement level had actually broken to the downside, or if we were just seeing a bit of a downward spike, a bit of slippage, and an attempt to hold this area before making a new run higher. So, as things currently stand, as we can see here, we have broken slightly below this red region here. This would be the 23.6% Fibonacci retracement of the move from $3.68 to $5 and roughly six. I should probably call this 65 cents at this point because we did slightly breach this prior area here. This is based on the $5.65 high, not the 561 high. So, as things currently stand here, the price move that we're watching rests between $3.68, this major long-term low that we were watching, and then these recent highs, which come in right just above $5.60. So with that, we can see that the 23.6% Fibonacci retracement comes in just below $5.20. And this has really been a period here, a zone of consolidation where we did see share prices sort of move sideways. Overall, share prices were really caught in this area. We did find some support after this drastic short-term price movement to the downside. And then we did sort of form a base here before making another run higher. So as things currently stand here, I would be inclined to say that this 23.6% fib level did actually hold as support. The real confirmation of that assessment or assumption would be that share prices would really need to break above this $5.65 mark to form new highs above that level. The ideal scenario would be if we were to close above that level this week, but it's starting to look like the share price itself is going to have a bit of a difficult time getting there before the end of the trading session. So if we do close below there for the week, that is a bit of a negative signal here because we would have preferred, the ideal scenario would be a close above the resistance rather than below the resistance. So if we were to open the trading session on Monday and start to see share prices move lower, that would be, a negative event because it would create a triple top right in this region. And then we would really need to see share prices hold support right around this $5.20 level in order to maintain this uptrend and keep this bullish momentum intact. At the moment, what we're seeing here is this rising 100-period exponential moving average. That would be this rising purple line here, which is starting to come into contact with this zone. Remember, it's called a moving average, so that means that it's constantly moving. So, as we head into the trading session on Monday, this should continue to move higher and then really form a base here, come in contact with this $5.20 area. And then we'll have to see if this region here continues to provide support for the stock. I suppose the worst case scenario here would be if we were to form a triple top resistance zone here, and then on Monday see share prices move lower and then break below this $5.20 mark. That would suggest that we could be in for a period of sideways consolidation. I wouldn't yet be ready to fully throw in the towel yet as far as the bullish stance goes, however, because I would really prefer to see share prices move below this $4.80 region, because this is quickly coming into contact with the 200 period exponential moving average, and then we also have this 38.2% Fibonacci retracement zone coming in right around $4.90. So in my view, this should be the stronger level of support here. I think that what we started to see at 565 was probably a round of profit taking. It shouldn't be totally surprising for a movement like this, for a stock like this, to see this much price movement in the positive direction in such a short period of time. And then we also have to remember that most of this upward price movement occurred as the rest of the market and definitely the technology space was really being sold off quite heavily. It was really kind of surprising to see that NIO was able to kind of step outside of this trend and make an upward price movement on its own, even while the rest of the market was seeing a tremendous amount of selling pressure, and a lot of that selling was being directed right at the technology sector. So, when you see price movements like this that are so strong in a broader environment where many stocks are still being sold off, it really can't be surprising here to see some sort of profit taking, take place. And this can send share prices back into short-term levels of support. So fortunately, what did occur here is that this 23.6% Fibonacci retracement zone did actually hold prices long enough for at least for us to see a retest potentially of this prior double top resistance zone that's coming in just above the $5.60 mark. So that's the real question here going forward. Do we fail at this level? Or is it possible that we could maybe close above this region here to close the trading week? I'm a bit skeptical of that. I would be surprised if that were to occur. But the real question here going forward is whether or not this level is going to break, or if we're going to see a price movement back toward this $5.20 mark. So here's the current stock market update for NIO Incorporated, stock ticker NIO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.